Trading is a lonely game, so grab a coffee and let's change that. Roll the intro. Alright, don't adjust your radio set, you're right on time. Coming to you from Vice City's Hot 44 FM, your premier trading show, the Bullish Café. Ladies and gentlemen, welcome to the Bullish Café, and thank you for being here. Now, continuing the story, we started in episode 1, where we looked at our higher time frame positioning for DXY on the yearly level, then the monthly, and now we take it from here. Going into the week, we're gonna see how we prepare for it and what trade opportunities popped up. And this is gonna be the format for most of the episodes, whether it is a forecast or a review of any given week. And man, you're gonna enjoy the structure, because what trading needs is some structured work. Alright, we start of course by the weekly news calendar. Always step number 1, that is gonna be our roadmap through the week, where we have to mark out the major news days where we have high interest to participate, and days to stay away from the charts. So here it is. As we can see, it's actually a fantastic week to trade. Red folder news, all week long, every day except Tuesday. And of course you can see what each of these news events mean, where the data comes from, some journalism about it, all the good stuff if you want to be trading with some awareness. And I guarantee you'll be able to understand anything written in there. It's not rocket science. And anybody now can sound like an expert, man. Expert here, guru there, where in reality, information is available for everyone. Clear and simple. It just takes a little bit of research. That is, if you're interested in looking deeper, which I advise. If you're not, you don't have to. Because the most important thing that matters to you and your day-to-day trading is already packed in this table here. Very simple. Day of the week, hour of the day, where the most action is high likely anticipated. It could be an expansion, a manipulation, a liquidity sweep, whatever it is, it should be at these exact hours. So that's our basic general rule of thumb. High impact news equals high volume equals high fuel to push price where it should go. That is why, since we have a lot of these scattered around our calendar, we confirmed that it's a good week to trade. Why? Because a high probability of large movements and therefore trade opportunities. So this has helped us plan our daily intervention for this week. We have Monday, red folder, yes, tradable, maybe, but since it's the first day of the month, we stay off the charts. Okay, take this as a rule, a good habit, whatever you like. When it's the monthly close or monthly open, just take a break and stay away during that day or two and come back to see what clues gathered for you. Because the market maker knows that during a monthly open, which is the first day of the month, or even weekly open, which is Monday, traders are only working out of sentiment alone. So let's not do that, alright? Stick to your plans. And next we have Tuesday. No news, no interest, we're just not gonna be there. And from Wednesday to Friday, high interest days to look for trade opportunities, we are definitely there. So there's that. And on to the charts now. Alright, this is the weekly chart on the dollar index. And yeah, things are looking very interesting here on weekly. Starting by reading the current market structure, as we already figured out on monthly, it's a consolidation with major liquidity sweeps from both sides. sweep sell side below this low, then sweeping buy side liquidity above this high, and always back into the range. This is what we explained on episode 1. So we're looking at this last price leg to understand how things are going. From this last buy-side liquidity sweep on the high, we have a bullish fair value gap created, and that is the only one. Notice previous price action, complete absence of any fair value gap. Next, price respected it first, gave a push higher, but failed to continue above the last swing high. And then we had a direct violation to the downside. Violation of both the bullish fair value gap and the swing low inside it. And at the same time, a new weekly fair value gap created, bearish this time. So it's in the opposite direction. Here it is, weekly bearish fair value gap created. After disrespecting these discount arrays, of course, price will be targeting the next discount array, which is this next swing low all the way down here. And surely, price strongly pushed lower and reached the sell side liquidity below that swing low. But then again, we have another sweep. Previous weekly candle closed like this. See, this is what I mentioned earlier. Sweep and back into the range, back and forth. But this time, it's a bit different. What is new is that we have a new bearish fair value gap confirmed, which also goes with this fair value area right here. From this arrangement of arguments, all we can say that from here, the nearest valid target is this premium area right here, composed of the weekly bearish fair value gap and the fair value area, low and body. That is our sweet spot. Anything beyond that, you're gonna need to wait for more clues. So that is your weekly bias, bullish from the nearest lower time frame discount array to this premium area we explained. And this bullish bias should be mirrored to bearish on the USD counterparts. Of course, you have your EU, your pound, your Aussie dollar, etc., which we will see next. So with this DXY bullish weekly outlook, we're good to seek bearishness on counterparts. Of course, look for sells in any /USD pair we find interesting, or buys in USD/ something. And the first thing I want to tell you about this matter is don't overmix it. I don't want you to be all over the place, looking at all the pairs simultaneously. It'll get confusing. Because yes, once you lock in your bias, like here, bullish on the XY, there's around 7 or 8 major pairs to trade. Based on that, your euro, your pound, your JPY, your Swiss franc, and the whole enchilada. So please, pick out 2, maximum 3 interesting markets to follow along during the given week. That is more than enough. You don't need to have a 4-monitor setup displaying 16 different charts to make good trades and withdraw money. If anything, being all over the place will only induce more FOMO, and you will pay less attention to where the best price action is being printed at that time. And we're gradually gonna be able to find out early on how to pick out the ones with the highest potential to efficiently deliver. Okay, so we logged in. The DXY bullish bias translates into bearish bias on counterparts. So let's apply this, starting with the euro dollar. As we can see, this is exactly what I'm talking about. The DXY bullish bias is perfectly mirrored to bearish here on euro dollar. Exact same price action upside down, which we definitely like. So we're taking this bearish bias on euro dollar, and now it's time to back it up with some arguments, simply by outlining what we see. Previous weekly candle closed with a strong Strong sweep above the previous swing high. Very major buy-side liquidity taken. And that buy-side liquidity is a premium array. And price, whether you notice it or not, whether you like it or not, moves from premium to discount, then discount to premium, back and forth, always and forever, in any time frame. So by that rule, after taking premium from buy-side liquidity, it's time to reach for a discount. And the nearest valid discount array from here is this bullish fair value gap. We anticipate that price will magnet to it next. And just like DXY, this fair value gap is perfectly aligned with this overlapping part. Right here, that's your fair value area. We take the wick and the body, both are valid. So fair value gap, overlapping part, with fair value area wick and body, that is our significant zones, where we anticipate that price is high likely going to reach. We group them into this discount zone and clean up a little bit. And another cherry on top to add more confirmation, let's look at these two weekly candles. Very large weekly ranges. What do you imagine it looks like, divided in lower time frames? Of course, a big uptrend. From here up to here. A big bullish price leg followed by a retracement lower, which caused this big rejection wick right here. And when we mention price legs and retracements, we have to say premium and discount. So roll the fib. There it is. Boom. Look at how our discount zone lands directly below the equilibrium level. Below that is the discount of the bullish price leg. You cannot tell me that this is random. So all of these arguments are setting us into the week with more confidence in our bearish bias, from the nearest lower time frame premium array to the discount area we built together. And we're ready to go to daily now. Yes, this is the daily chart. We already brought our bearish bias from weekly with a lot of confirmations. We're here to develop it more. And our attention goes straight to the previous daily candle close. It's the last Friday candle. Look at it. Big down close, big daily range, bearish, closing relatively far away from the previous low. What do we call this? It's a potential daily bearish fair value gap. Not confirmed yet, just a potential. What is it missing? It's missing the third candle. Because look closely, this whole part of the candle has a high probability of staying open and confirming the fair value gap creation. Of course, without being shut by the third candle. Okay, third candle and potential fair value gap. What does all of this mean? Well, you know where this is going, and you are correct. Education. Yeah, welcome back to this board on the side of the chart. Now, a fair value gap is obviously composed of three candles. All of them. Candle 1, 2, and 3. And 1, 2, and 3. And the most interesting part of it, the part that carries the most information, is the candle number 3, the one that comes last, which literally can make or break the fair value gap. If we master the third candle concept, we will have an advantage on how we build our probabilities. So the third candle of a fair value gap has three scenarios. Scenario number 1, a consolidation candle. This is where the third candle does not stray away too far from the previous close, which means that for the whole duration of this candle, price just kept consolidating in place. In this case, a fair value gap is confirmed, and price will high likely trade into it next. as manipulation. Then continue the expansion if the fair value gap is respected, of course. Scenario number 2, an expansion candle, and it forms what we call a breakaway fair value gap. It is where the third candle opens and just continues directly, further away from the previous close. And these should be identified and exploited even before the third candle happens. And it has conditions. Condition number 1, price has not yet reached a key level, a major liquidity in a swing high or low or a fair value gap. And condition 2, we have to go one time frame lower. Example, if we're on weekly, we go to daily. If we're on daily, we go to 4 hours, 15 minutes to 5 minutes, and so on. So one time frame lower and see if there is a fair value gap that holds by the conditions we explained on episode 1. So if these two conditions are met, we may anticipate a breakaway gap creation and go with it directly, because price does not trade into the breakaways, not until later after reaching a major key level. And finally, scenario number 3, a shutdown candle. In this case, price refuses to create the fair value gap. The third candle just straight up closes the gap that was potentially open and ends up basically engulfing the previous candle, which is not good. I mean, the fair value gap is cancelled and we should change our plans or stay away. And back to our charts, applying what we just learned. This is the Friday candle, big potential, daily fair value gap to be created here, which puts Monday in third candle conditions, with the 3 scenarios we just explained. And also, since it's the first day of the month, it should be skipped. We're more interested in the clues that come with it. All we need from the Monday candle is to confirm a daily bearish fair value gap creation, so no shutdowns, which means price should not go all the way up here to this shutdown level. Alright, respecting the rules and skipping Monday, good. Daily bearish fair value gap created indeed, confirmed by Monday as third candle. Monday was apparently a bearish expansion, also good, since our higher time frame bias was bearish, so it's a good start of the week. Already started attacking our discount zones that we previously outlined. And once again, we can see yet another daily bearish fair value gap potential. We deal with it the same way we just learned. Tuesday is third candle. Is it gonna be a consolidation, a breakaway, or a shutdown? You see, 3 probabilities. We should eliminate 2, and one of them takes the cake, because the market is not gonna do 3 things, okay? Since we're sharply bearish from the previous breakaway here, premiums created, and disrespecting discounts here, sounds very bearish to me. So we definitely don't anticipate a shutdown. We're left with consolidation or breakaway. Well, the answer is in the calendar. Tuesday is no news. So definitely the consolidation is the highest probability. And there you go. Tuesday closed in consolidation. Small range day, no news, nothing to do. Confirmed the new daily bearish fair value gap, no shutdown, and no breakaway. And Wednesday is our interest day. It's coming up next. What do we anticipate? It's already in the ballpark. The daily bearish fair value gap is your premium array. We need price to touch on it as manipulation, then a lower time frame bearish reversal to continue lower. So the plan for Wednesday is clear. Daily candle opens, anticipated move higher to manipulate, where? In the daily bearish fair value gap as our premium array. Once this area is reached, we switch to lower time frame to monitor the end of that manipulation using our beautiful reversal model. And I am very excited to show you how we can locate exactly where the order flow shifts to bearish so we can take our sells. And that is our time for today. Stay tuned for the next episode where we switch to lower time frames and find our entry points. Until then, take it easy. It's just another day at the charts. The Bullish Café signs off, and back to you, Rico. Spin some records. Oh yeah, this next record is for you to get down at the Malibu and apologize in the morning.
Sunset in the window, coffee getting cold on the side. We keep talking in circles, saying what we both try to hide. You say people change fast, I say some things stay the same. We've been dancing around it, scared to call it by its name, but we're still running on. Heart after heart after heart gets drawn in the dust on the glass. Every moment gone too fast. Yeah, we're still rolling on. Laugh after laugh after laugh at dawn. Every fight, every flaw, we've been, but we don't withdraw. We're still rolling on. Oh, we're still rolling, rolling on. You leave your jacket here,